So let's get this started. Thank you all for being here. Really appreciate you guys coming back every single month. This is Leveraging Market Stats to Boost Your Business series. We've been doing this for more than 5 years now, every single month going over the stats. But the most important thing is the trend lines. Where is the market now and where it's going. And the best part of this program, and I know I learn every single time, I learn something new every single time, is the great leaders that we have on. And we have an incredible leader. Her name is Anna Bozovic. If you haven't heard about her, she does great presentations. She's going to be at our Rock the Market conference September 19th.
Coming
So
up.
you guys are in for a treat today. Anna, how are you doing today?
I'm doing wonderful. Thank you so much. And I always enjoy these segments whenever we do them. We've been doing them now for a few years, and I always learn something too.
Yeah. Yeah, you're the best. So I guess the first question, we're live on LinkedIn, also on Facebook and YouTube. So let's say there's a new realtor, they just joined this program, they're watching for the very first time. How can you emphasize, how important knowing the stats of the market, how important is that, to be good at your craft as a realtor?
Well, I think it's super important always, but now more than before, perhaps, because Miami and South Florida is in a period of transition, and we keep rising on the world stage, and not everyone has caught up to this new reality. And what's happening right now in the press is that they become friendlier than they were a few years ago about Miami. However, a lot of press right now is grouping South Florida into a collective Florida story. We see all these headlines talking about Florida real estate, this problem, that problem, inventory higher, this, that, whatever. And these stories somehow lump our reality here in Tri-County, South Florida with the rest of the state of Florida. And this is absolutely not accurate. And the change in perception that needs to occur hasn't fully occurred yet. So we need to be the ones to be able to communicate this. And the analogy that I use is this. When we talk about, I grew up in New York City. I've been here for 13 years, but I grew up in New York City. And when one speaks about New York City real estate or Manhattan real estate and the market in New York City real estate, has anyone here ever heard New York City put in the same sentence as Buffalo or Rochester when it comes to real estate? I don't think so. Nobody ever lumps that together. And that same analogy here holds for South Florida. The press is still lumping us together with the state of Florida because they haven't adapted yet to this new reality that's here and that will continue to grow. So now more than ever, it's very important that we're experts, that we understand what is happening in our market, different segments of our market, and so that we can educate clients and colleagues as to these differences and realities and how we are not like the rest of the state of Florida.
Yeah, I love it. Yeah, and that's why we love you because you're leading the way in this conversation, and you guys are going to hear a lot more about that. So let me go through the different the agenda that we have today. We're going to go over the July 2025 stats. They're being released to the media today. You guys are getting a first look at that, and of course with Anna's perspectives. So we're here every single month. Like I said, we already have well, actually, the rest of the year already scheduled. You're going to have the Miami chairman of the board here on September 23rd on Zoom at 2 p.m. to go over the following month's stats. And so let's go over some housekeeping. I know some of the questions is this being recorded? Yes, it's being recorded. And it was also going to be uploaded to MiamiRealtorsLive.com. So you will have the recording, and then you also you're gonna ask can I get this PowerPoint? And answer is yes, I will get you this as a PDF. If you guys could type in your email into the chat, after I'll go through all the emails, and then I'll go ahead and I'll send this to you later in the afternoon, so you could have it. You could take your time to look over all the stats, and we have a lot of new graphics that we uploaded here to this PowerPoint. If you guys could stay for the rest, it's going to be about an hour, but we have brand new graphics that our design teams put together. And then another question that we have is what is the one website? So if you could remember just one website, it's this one, sfmarketintel.com. This is where we're going to put our July 2025 stats, new stats, our videos, our graphics, everything will be going here later this afternoon. So remember that website, sfmarketintel.com. All right, Anna, so let me go through these first three counties, South Florida counties, and I'll ask you a question. So here's a look at Miami-Dade. And I know you're going to love this one here because for years, Anna
I've
has
been
been
saying
talking
this.
about, yes, this is your stat. For years, you've been talking about this. And so we finally got it in a graphic. Single family home sales over 3,000 square foot. So I'm going to come back to that. I want to show everybody that here's Broward, some of the top indicators, 1 million up condo sales. And here's Palm Beach County, single family home sales are up. But yes, Anna, I know this is your stat. An incredible increase there. And especially when you compare it to 2019, right? There was zero.
There were
But
none.
go
Yeah.
ahead. I mean, how important is that stat there?
So the reason that for years I've been drilling down segmenting to higher prices per square foot is that when you look at higher prices per square foot, you're by definition isolating for a new product at prime location because older product and product at not prime location doesn't get the top price per square foot. So the same logic holds for condos and for single family. So when I look at data sets, you want to look for changes, right? Where is it getting interesting? Where are the big changes? Where is the after far different than the before? And in our market, the place where the after is far more different than the before is at higher prices per square foot. That's where we have the most extreme jump post-COVID versus pre-COVID. And that to me indicates that there's a new appetite, there's a new force in the market. When we see some hugely rapid change, we have to ask ourselves why. Something new has entered this market. And this has been the sustained pattern post-COVID. The higher up we go in price per square foot, the more the market is outperforming pre-COVID realities. And Chris mentioned the pre-COVID reality in this particular case, past 3,000 a square foot for single family was nothing. And it's now it's significant. We have a lot of transactions now past 3,000 a square foot. Even in Miami Beach here on the islands, the Barrier Islands here, now new build the last two transactions in the Venetian have been over 5,000 a square foot. So all of this would have literally didn't exist. And it's further indication that it's so important to segment because the higher segments of our market are outperforming or performing very differently than everything else. And this also indicates, to me, it's a clear reflection of the appetites of the wealth and talent migration, right? We said that it indicates a new force in the market, something that didn't exist before, obviously, because it was zero before. So what is this force? This force is the appetites of the wealth and talent migration. That is both domestic wealth that we know is coming to us from our feeder jurisdictions that tend to be high tax states. And also it's a reflection of the ever increasing mobility of global wealth because now we're on that global stage. So I anticipate that this trend is going to keep continuing. We're at all-time highs, by the way, through July this year for this number. It's higher than last year. So while certain segments of our market are
En
down,
una clase.
sorry?
No, you can
Sorry.
keep.
Oh, I'm saying while most other segments of our market have seen decreases in transaction volume, this segment actually is up year over year and currently sitting at all-time highs. Or
Yeah,
through July, it's all-time highs comparing to through July of last year. So we're going to have a record year this year at this point, and it's just growing, growing, growing.
it's amazing. And then when you really think about it, 3,000 per square foot, that is a lot of money. A lot of money. Uh,
Correct. And it's heavy cash. That's the other point that I'll make. That's the other counter to Miami being a bubble. It's heavy, heavy cash buying.
yes, and that's a great segue because if you look at Broward County, condo cash buyers up 9%. That's one of the indicators I saw there in Broward. And here's Palm Beach County. Okay, Anna, so let's talk about mortgage rates. I wanted to I had notes here. I saw some great thing from the Housing Wire economist. He was talking about because
My
you're going
friend.
to see
He's
home
a good
sales
guy.
are down. Home sales are down. You're going to see, and he was talking about how it's a rate story and how rates are around 7%. So if they were go down to 6%, you see, he was talking about people are more likely to buy at 6 than at 7, and I thought that was interesting that one percentage rate makes such a huge impact.
Yeah, it decreases monthly payments. Also, it might free up some inventory. Because people who are locked into lower rates, they're less likely to list if they have to go up and get a much more expensive loan that's going to cost them more for the next purchase. So I think that the logic actually holds in both ends, that lower rates would increase some velocity in the market. It would make people more likely to sell and people more likely to buy. But I think that, I mean, I personally do not anticipate a huge decrease in rates in the foreseeable future. I mean, we might like float around where we are, maybe a little bit lower, but I don't see it going down very much. And I think the Fed just announced they're not going to lower rates for the duration of the year. I think that was in the news yesterday.
Yeah,
Um,
yeah,
yeah. So I think this is just the reality. And again, I'll point out again though that this is we just, people think that the present is forever. They have short memories. But the ZIRP era, zero interest rate policy era, is a historic anomaly. It's very unusual in the history of all of money, not just our country. And so where we are now for interest rates, even at these levels, is still considered historically average or even on the low side.
Yeah, yeah, no, that's a great point. Historical average, yes. Okay, so get used to that. Those guys, 7% rates. All right, so let's talk a little bit more about the ultra luxury market. These were some stats we are looking at. Anna, this is from South Florida, so this is the three counties.
Yep.
A lot of what you talked about, you talked about over 3,000 square foot. These are 10 million and up home sales, projected to be right up there with 2021.
Correct.
Uh, Amazing.
If you go to 20 million and up from Miami-Dade, we're at record transaction volume. So it's back to that logic that the higher up you go in price, the more we're shooting off to the sky.
Yes. Yeah, so that's another, this is a brand new graphic that the team put together.
Awesome.
You'll be seeing that on social. All right, so let's talk about, what makes Miami different from an LA, a New York, Chicago. There's a lot of different fundamentals. Let's talk about our population, international migration, and so forth. Our population continues to increase. This is great news because Anna, these are the future buyers. You talked about the wealth migration, and that's part of it.
Yep.
People continue to move here.
Yep. And I anticipate this to continue too. That's another thing I've been saying for years is that when we see something happening, this trend line, we have to ask ourselves what's driving it and why would it reverse? That's the other question. So why would we see in the foreseeable future, why would we see a net migration of people back to high tax states? I think that's the big shift that's underway in the nation is that wealth is more noble, mobile, jobs are more mobile, both domestically and internationally. And in our own country, the pattern is very, very clear. I've put out tons of infographics on this using tax records, everything else, that the migration in our country is from high tax states to low tax states. And the net population loss from high tax states is staggering since COVID, and I don't see that reversing net. So this is going to keep continuing, and I think that the high tax states are going to double. As I've been saying, actually, and I get no joy in this because I grew up in New York City and I love New York City, but I've been saying for a while now that they're going to double down on their policies that are hostile to wealth because they're going to keep feeding into that narrative, into that base. And what do we see happening in New York City? They're going to most likely elect a guy who has spoken about seizing the means of production. So it's like a slow moving car accident happening. And I think that these forces will just keep pushing people to us.
Yeah, and that's a great point that they mentioned with the election in New York that it's going to bring more buyers down here. And
Yep. It's all part of this pattern. And the pattern would have continued anyway because it's not like New York was reversing course and going, in the direction that was more friendly towards capital. But this guy, I think, is like pouring gasoline on the fire. I think it's
yeah.
really horrible. I can't actually like I watched a video of his once late at night and I couldn't believe what I was seeing. I thought it was AI. I said, wow, he's actually saying this. And he is.
Yes, and I believe his name is Mandani, I think Mandani.
Yes, yes. And I was saying now, if you're going to destroy New York, he's basically quoting the Communist Manifesto, seizing means of production, like what, government this, government stores. This has never ended well. There's not one example in history where anything that he's saying along these lines has ended well. It always ends horribly. That's the pattern. And it's like if you're if you're going to quote the Communist Manifesto and destroy New York City, at least come out wearing camo and have a machine gun or something. It's kind of tragic when he looks like a total wimp and he's going to destroy New York, but separate topic.
Yes, every time.
Let's go.
Um, yes. I'm just looking at the chat. Thank you, David. He was asking, I believe he was asking about the ultra luxury graphic. Is it number of units? Yes, it's number of sales, and we could get that on the access. Yeah, thank you. Thank you, David. So, all right. So, what makes Miami unique? No one has these numbers. International migration. Go ahead and add Miami-Dade and Broward. It would dominates the entire U.S. in terms of
How
people
awesome is
moving
that?
here.
That's awesome, I think.
Yeah.
Mhm.
And then we have this graphic here about the companies that have I was talking about the wealth migration. This is part of it. Citadel chose to move from Chicago to Miami, and these are other examples. And then Anna, I wanted to show you this. This is a commercial graphic, but it's a brand new one that the team put together. Miami ranks number one in office market in the US and in terms of vacancy rate. So that also has to do with population. We continue to get population, so that's why you're seeing those
Population
numbers.
that's coming here to participate in the economy. That's the change in perception that needs to percolate throughout the media and the world too. It's not just a retirement place or hide your money place. The fact that we have these low vacancy rates indicates that the people who are coming here are actually coming to participate in the economy. So it's a whole shift in the life cycle of the person who's coming here.
Yeah, I love it. Participate, right? They're not coming as tourists, right? They're
Yep.
adding to the yeah. Awesome. Okay. And then we have this graphic about, what are the feeder markets? And so no surprise, number one is New York, number two, LA, number three, Cook County, Chicago. But I know this is a good way if you're a realtor to leverage business, right? If you could build referrals and this is where the buyers are coming from.
Yep, and the vast majority of these places I've been saying are high tax. I've done presentations where I've had this type of migration map right next to a tax rate map, and the correlation is like very, very strong. So the pattern is super clear. It's people moving from high tax states. And those states tended to be high lockdown, so that's kind of also what ignited people during COVID, but this is not going to change.
Yeah, like that's very smart. Yeah, to put the tax changes. That's awesome. All right. And then so let's do some little trivia. Let's test everybody on the call. Thank you guys for being on the call. So we have this Miami Global Trivia. We just recently put out a brand new Miami new construction global sales report. So if you haven't seen that, you could it's on our website. I'm gonna put it in the chat, the how to get it. But see, these are the questions. What is the top foreign country purchasing in South Florida? If you could type it into the chat, we're gonna see who gets it first. And then the second question is what percentage of Miami new construction buyers are from Latin America? What percentage? And then number three, what percentage of Florida global real estate sales are made in South Florida? So if you could answer that in the chat, we're gonna see who wins, who gets it first. All right. Okay, median sale price. Let's go over some of these new stats, brand new stats. So first of all, we want to mention that how historically Miami has incredible home price appreciation. You guys have those numbers. And then, so here are the stats, Anna, for Miami-Dade. Single family, this is the first time in 14 years that single family prices have dipped down, and then condo has also dipped down a little bit. Um, I don't know, this could be an impact of the inventory, right? We're seeing a lot more inventory, and that's putting pressure on the prices. What do you
So this
think?
the percent change here is year over year.
Year over year, yeah.
Yeah, yeah. So, okay, I'm going to start with the condo market because that's the easier one. For the condo market, I think that it's important to segment out and understand the difference between older product that's affected by the state law change requiring reserves, because not all old buildings are in bad shape, but many of them do have challenges now because doubling or even tripling of HOAs, whatever it is, and they can't unload them. So for the condo market, that's a very, very important divide. That new product is behaving differently than older product, because if we chart median pricing for newer product, it looks quite different. And also similarly, from the condo market, past 1 and 2,000 a foot, we're also up year over year for transaction volume. So these are differences in segments of the market, but of course the majority of the market, because if the median price for condo is somewhere is 406, right? So half the market by definition is below that amount, and so that's where the majority the plurality of transactions are happening, and so we lose that distinction at the higher end. And also for the condo market, it's important to keep in mind that the pre-construction pipeline is not reflected in this data because pre-construction is not in the MLS, it's not in tax records until the building closes, and then it's in tax record, but it's actually not in the MLS ever. And so we have one of the most active pre-construction pipelines in the nation, and many projects are doing great. And they're all selling well over 1,000 a foot because you can't deliver a new product for under 1,000 a square foot anymore. It's impossible. It pretty much 1,000's like the floor. Many of them are quite more than that. And so all of that would boost the condo pricing, but it's not in this data. So I would say that this data skews towards the reality of the older inventory set, and the older inventory set is also it's getting obviously challenged by the state law change. And at the same time, when we sell those maps of the feeder jurisdictions, the people coming to South Florida from those high tax jurisdictions, those people were never interested in older, less expensive properties. By almost all of them are looking for newer properties that are above this median price point because they're coming from very expensive areas like New York City, right? So it's the newer stuff is getting helped by the wealth and talent migration. The older stuff is not, and the older stuff is getting hit twice because they're not getting helped by the wealth and talent. It's not getting helped by the wealth and talent migration, and it's affected by that state law change. So the older stuff is dividing in performance from the newer stuff for condos. For single family, it's well, I mean, single family, you have to keep in mind 1.5% is again not a lot, and the single family home market has shot up almost 90% since pre-COVID for median pricing. So if anything, this is a healthy stabilization, like point number one. And I think why we're seeing a less of a dramatic stabilization or decrease in the overall number is because single family doesn't have that lower portion that's affected by the state law change. So we have less of an anomaly at the lower end. And also, one thing I've been saying for a while for single family is the lower end is just disappearing. Below 500,000 is gone. It's a 90% almost decrease. Sorry, over 80% decrease in active listings under $500,000 now versus pre-COVID. So I think this is all just the market doing a healthy 1.5% is nothing. It's the market doing a healthy leveling off before we even segment. But then if we segment into the single family home market, we are seeing record volume and year over year growth at the higher price points. So there's some of that reality with single family as well, where the higher end is performing better than the lower end, but less dramatic than with the condo market because we don't have the effects of that state law change requiring reserves.
I love it. What a breakdown. I think that's a great soundbite that I'm gonna save when I go over the video. I think that's awesome. Healthy stabilization. I think you put it perfect. Um, Thank you. All right. And then Anna mentioned the, special assessment that have been increasing recently. There is a program from Miami-Dade County that where they give you loans for those special assessment programs. Average loan is 26,000. So you could access the Miami-Dade.gov and you can find out some more information. There is that program that Miami-Dade does have that program. And then here's a look at Broward. Again, minimal declines here on the median price. And here's Palm Beach County. Let's look at it through a longer lens, so going back to 1995, and you could see how if you look at it over a long term, price appreciation has been incredible, especially since 2011, right? Right, Anna?
Yep, exactly. And then the slope changed right at COVID. So look at the slope in the line, it goes up like that at 2000, 2020.
Yes, yes. COVID was a boon here for South Florida. And then so here's a look at Broward median sale prices historically. Again, you guys will have this when if you type in your email into the chat, I'll send you this PowerPoint. Here's Palm Beach County. And then let's talk about Miami-Dade listings. So this was at the end of 2024. The average is 18,851, and then we finished below it. So yes, inventory has been increasing, but it's still not at the historical average. It's still not where, and especially key price points, like you mentioned, on the single family side.
Yeah, correct. And I actually just updated this. If you guys go to my website, which is analytics.miami, or on Instagram, Anna_analytics, I updated my mid-year report with this data through Q2. And you're absolutely correct. Both this pattern holds. So both without any segmentation, both single family and condo active listings are below where they were pre-COVID. I think it's in my report. It's like 18%, something like this, but they're significantly below both for condos and single family where they were before COVID without any segmentation. When we do start to segment, and in my quarterly reports, which you can all download, I show supply and demand relationships for segmented price points for both single family and condos, and it's important to see if those relationships have caught up, right? Like simple supply and demand economics. And again, past $1 million for I segment between 1 million, 2.5, 2.5, 5, 10, 500,000 to 1 million. And in all of these segments, the demand portion is measured by sales velocity, number of transactions, has gone up much more than active listings have gone up, even though they've gone up year over year. So the market is actually tighter than it was pre-COVID. Supply, even though it's up year over year, has not kept up with demand, and overall supply is still below where it was pre-COVID. And going back to what I said at the start of this presentation, we're getting lumped together with stories about the state of Florida and surging inventory above whatever levels. That's not true in our market.
Yes. And Anna, where again could they download the report? What's the website?
Oh, yeah, yeah. So all the quarterly reports can be downloaded on analytics.miami. That's my main website. So there's Q2 2025 historic reports. All the quarters are put out for like a long time, 10 years. And then also I do I publish quarterly reports there that everybody can download. So next one will be Q3, but on my Instagram I also give smaller like micro updates, and that's Anna_analytics.
Okay, great. Yes, someone was asking in the chat, Annabella. Okay, so I typed it in there. Thank you. All right, so let's keep moving on. So why do global buyers
The best
buy
graph.
here? What's that?
I love this. I love this one. This is a great chart.
Yes, yeah. You talk about like why Miami. I mean, I think this one really explains it. There's so much more bang for your millions here, right? Especially in comparison to Monaco or London. Yeah, what do you
Correct.
think about this?
I love this chart. And bank for your millions is a great phrase. I might borrow that. That's fantastic. But no, absolutely. Look, as much as we've shot up since, as much as we've ascended onto the global stage since COVID, we're still actually early days in our growth. And I believe that. I think our region is going to keep shining and growing for the foreseeable future, next 10 to 20 years. We're on that slope. And so this to me further corroborates that it's still early days and that we have room to grow and that our global audience that's coming here is used to paying higher prices because they are doing so in other cities where they own properties.
Excellent, yes. And Amelia was talking about how now she follows you on IG, and so yes, definitely Anna's a must follow. If you're in real estate, you must be following her. Um, and so let's move on. We talked about how prices, historically have been really increasing here in Miami, and how people are saying, "Oh, is this going to be a 2008?" There's so many reasons why it's not, but Anna, if you could pick like maybe one or two about, why
Yeah,
isn't not?
I love this question. It's a super easy answer. When everyone asks you, is Miami a bubble? You tell them that bubbles are built on debt, not on cash. That's the most important point. The previous market had that crash because what happens when you over leverage debt? We define bubbles in retrospect when they pop. It's like, and then it's obvious to everyone. And why do bubbles pop? They pop because the underlying assets can no longer sustain the debt load. And then it becomes like a flammable house of cards and just pops because there's no substance to it. We've all seen the stories, the liar loans, all that stuff. Our market currently is built on cash. And actually, in my reports, I show the all cash percentages for each segment. And again, the higher up you go, the higher it is all cash. But even at $1 million, not like $1 million isn't a lot, but we have a lot of transactions at $1 million, the condo market is over 70% all cash. Past 2000 a foot, it was, I think, 84% all cash. So it's heavy cash, and we have high levels of home equity in our market. So absolutely not. Bubbles are not built on cash.
Yeah, I love it. And what's interesting about the cash buyers, when you go further north and looking at the stats, Miami-Dade, of course, is high, but Broward has even higher cash buyer percentage, and Palm Beach even more so.
Yep,
Um,
correct.
so,
That's right. It holds for all of Tri-County, South Florida. We're a heavy, heavy cash market.
mhm. Excellent. All right. All right. So let's talk about closed sales. I mentioned at the top, closed sales are down all three counties. And we already mentioned some of the reasons why. And one of the main ones, it's a rate story, like the economist from Housing Wire, Logan, mentioned today. But
But again,
yeah,
I'll point out when we segment, like we were saying, there are portions of the market that tend to be new prime product that are up year over year and at all-time highs for transaction volume. So it's important when we talk about the market to understand which segment we're talking about because they're behaving differently.
yes. All right. So here's a look at Miami-Dade, and here's Broward County. Palm Beach County, single family home sales are up 1% there. Okay, let's talk about some ways that we could help everybody on the call. Thank you. There's 41 on Zoom, and I know more on social media. But so how can you leverage these stats? I think one of the main ways is by using Market Watch, Matrix. It lets you see what's happening in the last 7 days. Um, if you're not using that, you should. And then here's some other tools for Miami members. I've asked leaders, and they ranked, of course, the MLS matrix is number one, but number two might be IMAP. That there's a lot of data there, property data that realtors should be leveraging, right? I don't know.
IMAP is fantastic. I always feel like I discover new capabilities in IMAP. You can export and filter down by all sorts of criteria. I encourage everyone to play with it.
Yes, IMAP is a must. And then SunStats, this is for free. I know in last months there's questions. I get emails. Oh, how can I get some charts? It's easy. It's use SunStats. I'm going to show you. Here's a look at IMAP. There's an incredible data example. Again, it's a free Miami service. And then we also have RPR that again is giving you data. And then, but I wanted to show you here SunStats. So I always get questions, oh, how can I get this, graphics or charts on different zip codes? It's SunStats. Any zip code in Florida, any city in Florida, you put it in there and you get these charts, you get these infographics in literally minutes. So if you're not using it, you're missing out. That's some stats. Okay, so let's talk about dollar volume, sum of all sale prices. So I know this is a down month in comparison year over year, but still a lot of money. And like you mentioned, it doesn't even include pre-construction or new construction. This is the most powerful industry in Florida, isn't it?
Correct, absolutely. And also, this is month over month it's down, or July over
This is
July.
year over year.
Okay. I think in my mid-year report, I have this a similar stat where I look at total dollars spent and I compare H1, the first half of the year, because through Q2 versus H1 of last year. And actually for the half to half, we're actually up year over year.
Oh,
So a little bit, yeah. So it's maybe it's floating around this new reality, but we're still significantly higher than we were pre-COVID for total dollars spent significantly. And this is a great point though. So question, everyone to think about. We're you could see this chart, obviously. We're significantly higher than we were pre-COVID in terms of total dollars spent. And in my report, I have that exact percentage. Meanwhile, though, transaction volume overall without segmentation, as we discussed, is down. So how are we up for dollar volume spent, but transaction volume down? Well, the number of properties sold down. The reason is obvious is that it's the higher end, more expensive stuff that's actually at higher sales volume. Thus, we have a higher total dollar amount spent.
interesting.
Yeah, right? So right. How has more money been spent versus pre-COVID while overall sales volume is down? Because the things selling are more expensive.
Yes, yes, very good point. Um, okay. Let's take a look at months of supply. So months of supply is a very important metric. So we want typically, and what we've historically done here at the association was 6 to 9 months is a balanced market, less than 6 is a seller's market, and then more than 9 is a buyer's market. We want 6 to 9 because that helps everybody. And then so here's a look at the calculation. You could do this, whatever city or zip code or even for block. Here's the calculation of how to do it. And again, you guys will have this when I send you the PowerPoint. Um, so Miami-Dade months of supply overall, all properties 10.5 months, single family. We are in a balanced market because it's 6.6 months, in condos at 14.1. This is the trends we've been seeing there. I mean, Anna, it's good news. There's more properties on the market, especially on the condo side, more choices, right?
Yep. And again, that bump in the condo market is influenced by the challenges of the older inventory, the older product, and that rule change this year.
Yes, that went into effect in January 1st. So
That was a
definitely.
big force in the market.
Yes. And so you're gonna move to Broward, you're gonna see similar single families in a balance in Broward, and then condos were in a buyer's market, 12 months, and similar story, actually a single family seller's market, and then condos with buyer market. And then, so we talked about, Anna has talked about how it's important to segment and break down the data. This is just one way to do it. This is by price bucket, as our chief economist, Gay Coraton, loves to say, price bucket. But you could see how it changes. You could be, in a seller's market, but a balanced market buyer, depending on which price bucket you're looking at. And Anna, what I need to add here is, 1 million to 2 million and 2 million to 4 million, because that's where the bulk of the sales are, right?
Oh, well, no. Good. Excellent point here. So by definition, right, what do we say? The median price point for a condo in Miami-Dade is 400,000 and change, right? It's in the 400s. So
Mm.
actually, no, half the market transacts below 400,000 for condos. It's just that we have this surge in transactions or this new kind of market force at the higher price points, which are behaving differently. And it's definitely not insignificant. It's a big part of the market. It's certainly the part that's in the news, that's reported on and so forth. But still, half the market transacts below 400,000. And for single family, half the market transacts below 600,000. And for single family, that's a really interesting story because for the condo market, there is this inventory coming in because of the challenges of the HOAs and so forth. But for single family below 600,000, as you can see, those numbers are very, very low when it comes to months of inventory. And there's really nothing there, and nothing is going to be replaced. It's super super tight. One stat that I've talked about for a few years is that below $500,000 in Miami-Dade pre-COVID 2019, there were around 4,000 active listings in any given month. Right now, they're like 600. And that 600 doesn't account for stuff that's land value, doesn't have a roof, not livable, right?
Mhm.
So it's extremely, extremely tight and it's not getting replaced. And the other big difference between single family that's anywhere within proximity of urban cores and condos is that when it comes to single family, we can't add more inventory vertically. They're finite pieces of land. Condos, multifamily, thankfully, we're building a lot, which is mitigating rent increases, all of those things. But for single family, we can't. So I don't see any relief in the horizon for the single family tightness below, even below $1 million.
Yeah, no, that's a great point. I mean, we have the Everglades on one side and then the ocean on the other. Yeah.
Condos, we still have great zoning in the city of Miami. There's a lot of unused FAR, a lot of places you could build, add multifamily, add condos, so forth. Single family, nope. All that happens is that older houses get purchased, replaced by newer, more expensive ones that max out the lot, increasing the prices even more. And it's just disappearing. The half a million is disappearing. And in some submarkets like Coral Gables, for example, there's nothing under a million. There's like I think 4 listings. There's quite literally nothing. It's just gone.
Yeah, that's amazing. Yeah, I mean, you could even see that, yeah. So definitely if you own a single family in Miami, you're in good shape. Definitely. Okay, so let's talk about some of the hot markets. How do we define hot markets? So it's months of supply. And so on the single family side, the hottest market is Miami Gardens with only 4.5 months of supply. On the condo side, it's Kendall with 6 months. Anna, any of these? I mean, you just touched
So
on Coral
I'm gonna
Gables.
so what's super interesting here, I'm glad I just mentioned Coral Gables. Numbers 1 through 4 on both of these lists are not luxury markets, right? There's product in those markets. I mean, nothing's cheap anymore. I'm not saying that, but they're not exceptionally expensive markets. And it makes sense that we're seeing these lower months inventory, especially for single family, because we're at price points that are in super, super high demand and can't get replaced, right? Coral Gables is an expensive area, and it's still on this list as an example where it's so tight that it doesn't matter. I did a report once. Is a Coral Gables below $3 million built after the year 2000? I think there were 5 active listings.
Wow, only five. Amazing. And Coral Gables is right in the middle of everything. That's
Yeah,
the
yeah,
location, location, location.
exactly.
Yeah, wow. It's amazing. Okay, so that's the hottest markets in Miami-Dade. Let's take a look at Broward. The hottest market is Sunrise is number one for single family. And then for on the condo side is Miramar. Um, but yeah, Sunrise is that's where the arena is, the hockey arena.
Mhm.
A lot going on there as well. And actually, I just remembered there was a new ranking that came out. It says the best markets in the United States for first-time home buyers. Ranked number 10 in the US was Sunrise, Anna.
Oh, really?
Yes, Sunrise ranked number 10 in
Oh,
the US for best markets for first-time home buyers. And our Broward, Miami president, Larry Singh, is quoted in the article. Um, and actually, I'm gonna, I post daily articles. I'm gonna write the link in the website. I believe this is the MiamiRealtors.com/trending news. I hope we fixed it. We post our daily articles there if you guys are not aware. And I posted that article there. So yes, Sunrise. And then here's a look at Palm Beach County. Royal Palm Beach, number one on the single family side. Palm Beach Gardens, number one on the condos. Active inventory, we talked about it all along. It's going up and it's been going up for this entire year because of what Anna talked about, the condo regulations. And so year over
well,
year, up
I will point
33%.
out though, just looking at the charts, I was thinking about this in my report the other day too, is if you look at the slope, it's the curve is going like this now.
I do see that, yeah.
Yep. So that means that it's kind of the surge is subsiding and it's actually off of highs for Palm Beach, I think it is there. So it's not like inventory. If inventory was shooting up, the curve would look different. It would look like this. So it's not true that inventory is shooting up. It's kind of like this now.
Yeah, and that's a really good point. It makes me think of the news release that we're sending. If you look at new listings, they are decreasing now.
There you go.
So there you go. You're not getting that fresh new listing. So it's yeah, we might have seen the peak and now it's starting to. That's a great point. All right, so let's recap some of the stuff we talked about. Inventory still below pre-pandemic. And then right there was an unbelievable point about how the inventory might have topped off and we might be heading down. Keep an eye on new listings. Uh, 7% mortgage rates, buckle in. Those are here for a while. And some more points. And then it's okay, so global trivia. Who do you think won? The first question was, what is the top foreign country purchasing in South Florida? And actually, I looked at it and it was the first guess. I'm going to go back in the chat. The very first person to guess got it correct. Gloria Rubio, Argentina. Yes. Congratulations. That's incredible. Other great guesses. Colombia. Thank you, everybody, for putting it in. Colombia's right there. I mean, right there. So great. Thank you, everybody. Congrats, Gloria. The great job. So it's Argentina. And if you could remember, it's the Leo Messi effect. You know, he's here now and he brought the buyers. Okay, so the next question is from our new construction report. If you haven't read it, it's on miamirealtors.com/market. What percentage of Miami new construction, this is just new construction, are from Latin America? And it's 49 percent. And then, Anna, I wanted to show you this graphic here that we posted. It says when Latin American governments go left, the money goes north.
Same can be
This
seen
is the
in New York City now too.
Yeah. This post right here is the most viral post that we've ever had at the association. It reached almost 400,000 accounts.
Wow.
Amazing. But yeah, that's the impact of the left-leaning governments in Latin America. All right, thank you, Gloria. Gloria says, "Yay, thank you. You did a great job. Thank you, Gloria." Okay, so next question is what percentage of Florida global real estate sales are made in South Florida? It is also 49%. Um, and Anna, you would think Orlando would be a little bit higher, but look at the difference between one and two.
Huge.
Amazing. Um, I'm not sure if anybody, let me see, anybody's able to guess 49. There was 75% guess. Okay, 86, 60%. Yeah. Just going through the comments. I love this comment from Martha. She says, in other words, context matters. Love, Anna.
Thank you.
That's awesome.
Yeah, context matters hugely.
Yes, thank you guys. All right. So let's recap some of the tools and resources. SunStats. I hope everybody's here is using SunStats. It is free. Access it, leverage it. SunStats free. We have free co-branding materials, miamirealtors.com/co-brand. This is free where you could put with your company logo. We have Miami Photify. It is free. It's only available on your phone. You have to download it from the iPhone store, and then you could just log in with your information, and you get all these templates that are preloaded. All you have to do is add your information at the bottom, like these realtors are doing. And then so we have our market reports that will be posted on sfmarketintel.com. July 2025 will be there this afternoon. We have market focus videos. We have zip code and city reports. Again, one of the main questions is, oh, you guys do a lot, but do you have zip code and city? Yes, we do on our website, and then we also have it on SunStats. Oh, okay. I'm looking at there's a question here, Anabelia. What is the app to download? So you're talking about Photify, right? Yes. Just search for Photify in the App Store. Photify in the App Store, and then actually, you know what? Let me put in here's more information. If you need to it's fairly simple to register. You have to put in your NERDS number, but go to miamirealtors.com/Fortify. There's more information there to use that. There's more than 1,000 templates on Fortify. Okay, what else? We have RPR, which is free to Miami members. We have the Miami trainers that do a great job of putting on classes. You guys have any questions? Um, Email them, trainers@miamirealty.com. All right, Anna, we're getting close to the end. Wanted to ask you about here, cross-market demand. So this is what markets are looking at South Miami-Dade listings from out of state. Of course, New York is number one. You got DC number two. But as a realtor, how could they leverage this and kind of make more deals with this information?
I mean, recognize I don't, again, I don't think this is going to change. I think we already have New York at 21.8, 22%. So I think that New York might even go higher after November. Um, I mean, recognize this flow of what is really pipeline and see how one could target these people either through personal networks or through directed advertising, social media advertising. You could even select your cities where people will see your ads, things like this. Because this is not going to change at all. And I think this is going to be the story of our adult lives the next 10 to 20 years as America reshapes away from high tax jurisdictions that will be increasingly hostile to capital.
I love it. Yeah, take that advice. Become friends with realtors in New York. Get some referrals because one of the great quotes I think from former Chairman Fernando, he says, "Real estate is a contact sport."
Oh, that's great. That's a great
Yeah,
quote.
yeah, he's the king of quotes. So that's Miami-Dade. Look at this. New York is all over the list. Of course, you got DC number two, Atlanta at three for Broward County.
I
What
just,
markets?
it's all
Oh, go
like
ahead.
New York, Illinois, New York, New York. I mean, DC. The pattern is so clear. And this is just going to, it's going to, and again, I've put these charts next to charts of tax records, sorry, tax rates. It's just, it can't be more clear. It's just people who actually contribute to society leaving high tax states, and they're going to keep doing it.
Yes. And then wait until you see Palm Beach County. Look, I think it's almost every New York county is on the New York. I mean, love South Florida, but they really love Palm Beach.
Yep. Amazing. Yeah. It's funny. It's a little bit, I'm laughing. It's a little tragic. Again, I grew up in New York. I love New York. It's just, it makes me, the recent news makes me sad, but it is what it is.
It is what it is. Yes.
And we're all lucky to
Um,
be here. So,
Definitely. Some great comments in the chat. Shauna says, connect with New York Realtors. My partner and I have done that, and I've been working. Getting the referrals are great. And then Annabelle says, how do I contact them? I mean, how do you know who to contact? I think that's a great question. I think what a lot of realtors do is they go to conferences, right? And you network and for instance, we have the Miami Global Congress is coming up in November. There's a NAR NXT, so a lot of events where you could go to. All right, Anna. So here's Anna's information. If you guys aren't following her on Instagram, please do. Anna_analytics, and then her website we put in earlier. It's analytics.miami, right?
yep, it's there with the email. That's it. And they can get all the reports there.
Excellent. Okay, cool. Well, and then here's my information here. Excellent. All right, Anna, is there any first of all, thank you so much for your time, so for spending this amount of time. And I learned a lot. Any final takeaways for everybody on the call?
Just to emphasize again that we really have to be the experts because the news hasn't fully caught up with the new reality here. And we need to be able to explain to people that our reality here is different than the rest of the state of Florida. And I really like that analogy that when we talk about New York City real estate, we never put it in the same bucket as Buffalo, Rochester, or Albany. And so the same reality is emerging here in South Florida. We've become increasingly attractive to domestic and global wealth. And I don't see this reversing. I see it's just strengthening over the next 10 to 20 years.
I love it. All right. And then some questions in here. Where can we get the presentation? David, why don't you put in your email into the chat? Put your email into the chat and I will send you the presentation in the afternoon here. All right, awesome. Well, thank you, Anna. Thank you so much.
Thank you so much.
It's been awesome.
Hope to see everyone at Rock the Market. It's going to be great.
Yes, we'll see you at Rock the Market September 19th. Thank you, everybody, and have a great weekend too.